Welcome to Yap's Money Life Show. Thank you for your support and your interest. Today, I would like to talk about the unknown truth about banks' super high fixed deposit interest rate. Okay, now you see, a client told me recently that 2 years ago, his bank offered him a very high and attractive FD interest rate at 10%. No, on the condition that he also at the same time invest some of the money into unit trust. So he thought, hey, this is a very good deal. As long as he can get a high 10% fixed deposit interest rate, he would do anything. So what happened is that he told me he took 100,000 out from his fixed deposit. Then the bank put 25,000 of the 100,000 into fixed deposit and give him 10.5% interest per annum. Okay, and a balance 75,000 of the money is put into one equity fund with 5% sales charge. What my client didn't know is that the bank actually takes half of the 5% sales charge that he paid to the bank, and put this 2.5% into his fixed deposit. That's how he is getting a high 10.5% interest rate from his fixed deposit. Okay, so you see, normally when you go for this fixed deposit, you will be getting about, say, 3% interest rate per year. So the additional 7.5% that he is getting now is actually coming from his own pocket. What is worse for my client is that he doesn't even know much about this particular equity fund that he invested into. He doesn't know how to manage this unit trust fund, whether it goes up, it comes down. He didn't know what to do. At the end of 1 year, the fund, the investment, which is 75,000, ended up to become 60,000. So he didn't know much what to do, so that's why he just sold it at loss. So we can see here, for the extra gain of 7.5% of FD, which is 1,875 ringgit, he ended up losing 15,000 from his unit trust investment. So my suggestion to fellow viewers is that when you are determined to grow your money with high certainty, always be careful of unusual benefit being offered to you, because there may be some hidden risks, hidden disadvantages that you may not be aware. So think twice, think 3 times before you invest into anything that offer you super high interest, super high return. In this section, I will answer the question that I received from the viewers like you. Now, I have a question from Jerry. Jerry is from Sento. His questions goes like this. I am going to retire soon. Shall I settle all my property loans? Now, Jerry, to answer your questions, I will need to make assumption. And my assumption is that we got some money, say for example, 1 million cash in the bank. So if you were to take the cash that you have to settle all the loan that you have, of course, you will have no more loan. No? That is good on one end. But if we were to need to take loan to invest into any new property, then the bank may not give you the loan anymore because you are going to retire, or you are retired, you don't have any active income anymore. You see, current effective loan interest rate for property is about 4.5%. So based on track record, that is considered quite low and quite cheap interest rate. So if you don't settle the loan and you find ways to grow your 1 million cash you have in the bank to generate a return about, say, 6% and above, then it's better return that you're getting compared to you take the money to settle the loan, which may save you 4.5%. When effective loan interest rate rises from 4.5% to 6.5%, then you can see that interest rate now become more expensive. okay, and it's no longer low anymore. So for that matter, if you to actually invest, it's quite difficult for you to get a better return, and in that case, I would suggest that you were to use your money to settle the loan instead. So what is important when you apply this strategy that I share with you is that you must make sure that when you use the cash to settle the loan, you must not spend the money away as well. So if you are determined to grow money with high certainty, I would suggest that you must learn how to use loan as a leverage when the loan interest rate is low. If you want me to answer your most burning questions about money, about investing, about wealth management, please drop me an email or WhatsApp me your questions. Now, I have another question. This question is from Alif. He is from Taman Tun. Now, he said that I realize I need to pay income tax for investment property that generate rental. So would it be a better idea for me to invest in unit trust instead? So what is the difference in terms of benefits when investing in these two investments? Okay, now basically to me, both investment, whether you invest into property or you invest into unit trust, it has got pro and con. Okay, let me share with you. So for property investment, the benefit is that you can do leverage using a loan, you can generate rental income, and you can also enjoy capital appreciation. But the downside of the property investment is that it's not so liquid when you want to sell it to turn it into cash, and normally it's quite a big item. I mean, you need to have a few $100,000 or at least to invest into a property. And it's not so, the fact that it's quite a big piece, it's not so easy for you to diversify. Okay? For unit trust investment, the benefit is that you can invest in a smaller amount and it's more liquid. Okay? And since that's the case, it's easier for you to do diversification as well. Okay? But the downside of unit trust investing is that you can't really get loan to leverage in your investing. Plus also you will require more knowledge and you also require more discipline to make sure that you really make money in unit trust investing. So basically, as we can see, both investment, unit trust and property investment, has got its own advantages and also disadvantages. I wouldn't say one investment is better than another investment. Therefore, it's very important to learn how to use strategic asset allocation to invest. Okay, whereby when you invest in using strategic asset allocation, you are investing into different asset classes. By doing so, you'll be able to use the strength of one asset class to neutralize the weakness of another asset class. When you are determined to grow your money with high certainty, you must learn how to use strategic asset allocation to invest into multiple investment asset classes so that you'll be able to gain the benefit from different asset classes. Thank you so much for watching. If you want to learn more about how to grow your money with high certainty, please visit my website. You see, I will be glad if you are able to apply my strategic asset allocation ideas into your personal wealth. But if you need any assistance to apply this strategic asset allocation idea in your personal wealth, please feel free to WhatsApp me. I'll get one of qualified wealth manager to help you. So if you find this video that you have watched today to be useful, please comment, share, and like. Have a nice day. Hey there, if you like my video, please remember to subscribe to my channel.